Hello everyone, this is Evan here from the Trade Risk on Friday, August 26th with a weekend market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, sector analysis, and then finish off the video with some individual names. Now remember, if you guys do like these videos, please do subscribe to our YouTube channel in the bottom right hand corner. Click that subscribe button. Just keeps you up to date with all of the latest videos that we publish, as well as some of the live stream Q&As that we do just about once a week. So if you're interested, click that button down there on the bottom right hand corner. Now getting into this week's action, the S&P 500 closed lower on the week. If we go to the weekly chart, you can see we finished down 57 basis points. That's just over 0.5% on the downside, almost closing below last week's lows, but bulls did manage to stage a bounce here late in the day on Friday. Notice though, we are coming back down to testing that 8-period EMA on the which is still rising on the weekly chart. So still a very bullish, healthy kind of market and positioning of where we are, just a percent or so away from all-time highs. But you can see we're just kind of lackluster in here, waiting to see what's going on. The past 3 weeks we've gone nowhere, and that's sort of the landscape that we're in right now. If we go to the daily time frame, you can see this. I mean, the first thing that stands out is Friday's session. This is a very wide-ranged, indecisive bar, right? Lots of volatility, probed all the way to the top end of this range at 219, came all the way down to 216.30 at the lows of the day, until we got a bounce and closed effectively where we were yesterday, right? So after everything was said and done, Friday, of course, was Janet Yellen's comments out at Jackson Hole, so the market sort of digesting Fed's latest thoughts on when they're going to raise interest rates, and lots of volatility, lots of indecision, and basically the market closed exactly where we opened the day, or where we closed yesterday. So the interesting thing to note is where we are right now. This 217 level is significant. This was resistance for multiple weeks in July. It also has acted as support throughout August. Now, we did probe below it intraday, but the bulls did step in, show that there's some demand there, and did get us to a close above 217. Now, I think the lows from Friday are going to be very interesting next week. I think that's your line in the sand. Really, you want to see us stabilize here very soon out of the gates on Monday, to remain as healthy, constructive, and pent up as we have been, and as possible going forward. I think if we start to head back below 217 and we quickly take out these lows, if we have a gap lower next week, it's going to just set a very different kind of tone here, and could just really be the start of at least a larger pullback, or a pullback into this range, maybe back down to 215 and test this pivot. You can see the 8-period is heading lower, hasn't crossed the 20-period to the downside yet, but that would be another indication that momentum is slowing up here. And again, keep in context, the weekly time frame still very constructive and still very bullish. So it just depends on where you're trading and how active you want to be. But the daily chart, and it's been showing signs of sluggishness all this week. Remember, we started the week in the middle of this range. We had this kind of gap higher that failed at new all-time highs, and then we came back down to the lower end of this range. So, we've seen the signs slowly develop here that the market's tired. There's not much energy. Half of it's a product of just summertime light volume trading, perhaps post Labor Day, when everybody's back in September, and as the election gets closer, we're going to start to get a lot more pickup in volatility, or at least volume, into those next couple of months. So that's sort of the landscape that we're in. I think you have to be defensive. You have to be at least cautious, aware that we're at a bit of an inflection area, and depending on your time frame, that could have a larger impact on some, and for others, it's just stay at the beach. It doesn't matter. There's been no significant technical damage. If we go to the IWM, you can see things look even better here. We're still above or right at the 8-period EMA, which is still climbing higher above rising 20-period EMA. This is still in a bullish uptrend. Support here was tested at 122.40. It held. We got a small bounce. Still a very wide range day on Friday, but all things considered, there's no technical damage here, things still look good. If we go to the Qs, more look like the SPY here, where we're at the bottom end of a range. We're on kind of the 20 period in between the 20 and the 8, and we're just kind of sitting here to see what's going to happen. Now the Qs did have a day of relative outperformance here on Friday, finishing up 15 basis points on the day. It was the only index to close in the green on Friday, and that's interesting. And some of the names that we're going to look at speak to some of the strength here that we saw in technology in some of this high beta land of the Qs, NASDAQ 100. So that's the full picture there. Let's look at some other markets. TLT getting very interesting. This was a very tempting short for me, but this is something I'm still passing on. I'm going to let this digest a little bit more. You can see we did try and poke our head up today on Friday above 140, looking like we could maybe start to break out here early in the day, but we got a sharp reversal lower, closed on the lows. We're still above the support level. I think getting follow through next week will be the key here, and this is an actionable trade if you're interested on the short side here, or just TBT if you want to play it the opposite way, or TMV if you want some leverage. Then that's the play that you want to see. Can the sellers follow through lower, take out this support, get a meaningful close below 138? That would be the sign there that perhaps you got a big trend reversal, or at least some type of trend reversal at play here. So keep an eye on TLT next week. Gold also at an interesting spot here at this trend line. It was weak all week, down 1.5% on the week. You can see, looking at this weekly chart, we are now below the 8 period. Still lots of strength here overall. The bulls are in control on the longer term time frames, but on the daily chart, gold is vulnerable, just like silver was vulnerable to start the week. The end of last week, we talked about the vulnerability. If we lost 1840 in silver, we did, and we've been headed lower, 8 and 20 on the downside. So there's definitely some caution there in the metals. If we go to oil finished flat on Friday, and it is showing some signs of stabilizing here, even though this week it largely spent pulling back, but it was a healthy pullback, down 3.4% on the week, but you can see it's finding some support right above the 20 period EMA here, and that's what you really want to see, is a shallow dip, get the buyers interested around here, and then a trend resumption to the upside. That would be an interesting long opportunity there if you're interested in USO. As far as UNG, this had a great week this week. Started out here on Friday was the close down here in the pits on Friday. Monday, though, started the action to the upside. We had a island reversal higher to start the week. If we go down to a 15-minute chart, you can see Friday's action was kind of trapped down here. We started the week with that gap higher. That's a trade that we got involved in for a reversal. We bought in here on Monday, rode it higher Tuesday, Wednesday, I believe, is when we took some partial profits on this, and then we exited the remainder at 860 here on Friday. So we had a nice 3-4 day trade in UNG. We're no longer in this position, and we're just going to kind of wait and see, but you can see momentum converting to the upside there. Weekly chart looks interesting, but it is running into this horizontal sideways resistance there. That's half the reason why we sold. If you're interested in these trade alerts, check out what we offer. These are the types of trades that we look at, 3 and 4 day holding periods. This one worked nicely as it just moved higher in a straight line. They're not all like that. If we finally look at UUP, this was one of the biggest movers and one of the few sort of upside movers here, pure upside movers off of Friday's sort of action, finishing up 73 basis points. And it looks like you have a pretty clean, I got a lot of lines drawn here, but this is going to be a pretty significant, or at least a pretty important inflection point going forward. If you want to be long US dollar against 24.30 or so, that looks like a pretty reasonable spot to put a stop against and to measure risk against. So just keep that keep that in the back of your mind. If UUP continues to rally, perhaps we see some more pressure in commodities, but we'll have to see how that all shakes out heading into next week. Now, getting into some of the sector analysis, XLI is still pretty firm, all things considered. It is pulling back just a bit, but industrials are still pretty strong above this 5750 breakout area. XLF also moving higher on Friday, finishing up positive 12 basis points and starting to, try and push higher here. We've discussed how it's now, XLF is now back above this declining trend line extending from the all-time highs in 2015, or I'm sorry, the all-time highs in 2015. It's above there. Momentum is up on those longer-term time frames. We just need to get a little more energy behind this move, and we're maybe starting to see that kind of creep in now. Semiconductors continue to remain firm, just the absolute monster trend higher, and even materials had a lot of back and forth, but they're still firm, all things considered. But you really want to see them back above $49 to get constructive here, and you don't want to see us lose, $48.40 or so of support. That would be a bit ugly there for the materials. As far as the downside goes, XLY continues, or at least is starting to roll over just a bit here. You can see the 8 and 20 curling over. If we get back below 80.25, 80 and a quarter, that's where you'd have to be a little bit worried in the discretionary ETF. XLU got hammered on Friday, down 2%, and you can see there's been warning signs kind of stacking up here ever since breaking support back on the 5th of August earlier this month. That's when things have started to really accelerate to the downside. And IYR just continues to trend lower, get a little bit of bounce off the lows, but still 8 and 20 already firmly lower. This one's been, pulling back here on the daily time frame. Now, if we start to look at some of these individual names, we'll start with Apple. We haven't talked about this one in a while. Remember Apple, though, when we were breaking out here in this area in early August, it was just continuing to kind of float higher with no volatility, no pullback. Well, you're finally getting your pullback now. So if you're interested in Apple, it's particularly from this weekly time frame chart as it broke above this trend line that is extending from the 2015 highs, you want to be interested in dips. So this is the time to look at Apple. It's not a trade recommendation. It all depends on your strategy time frame, but just something to consider here. I have no position. I'm not looking at it right now, but as it starts to pull into some fast moving averages, it's always interesting. Netflix is pretty actionable here. We discussed this a little bit this week. You can see, similar to Apple, it's now battling with its trend line that is extending from the 2015 highs. It's getting really tight. Saw a nice positive 1.78% of outperformance this week. That's constructive. We want to see maybe a little more energy kind of get behind this, but Netflix looks pretty ripe here for potential upside trade. Facebook also spent most of this week consolidating, but had a nice kind of finish here on Friday. Really want to see it get back above 125.60, right where all of this little brief kind of consolidation was, right in here. If we can get back above 125, that would start to look pretty good. Amazon, similar situation, got a nice pop here on Friday. So these were some of the leaders here on Friday, some of the emerging names that were leaders for quite some time, and they're starting to get a little bit of return here. So keep these on watch. Tesla on the opposite end is starting to break down. Remember, this is a pretty tight pattern here for quite some time, and you're getting a close underneath it. Let's see if we get some early signs of weakness next week, but below 220, you have to be very cautious in Tesla or be short. And then finally, let's end with Alibaba. This one has been consolidating, pulling back off of the nice kind of earnings gains that it had on this pop higher. And this consolidation now finally got a higher high, took out yesterday's high, Thursday's high here. So you're starting to see some signs of stabilization and interest by the bulls. Keep this flag on watch heading into next week. And that is this weekend's video. I hope everybody enjoys, has a great weekend. Thanks for watching, and I will catch you next time.